Good morning, traders. It's Wednesday, January 29th. Taking a look at the charts, we've got the SP 500 daily chart, and yesterday we had a big rebound day, bouncing off that 20-day moving average. We've seen that before back here in December. Again, we saw it early January, and here we are getting another bounce. And we're looking to see if the market is going to roll over and give us a downtrend. The last time we got down and our pink cycle tested this line, we ended up seeing the market recover and continue in the power zone. We're right back down testing this level. It's threatening to break down. You can see how the cycle moves. When we break down from that level, we start to see price extend and have a flush out. Now overall, we had a pretty good spike in volatility here, so we may have flushed the market out, but at this point the momentum is still struggling to hold up, and where we're at today is the 5-day moving average, which is typically a pretty important level. Obviously, if we break these highs here, we're back into full out bull market mode and continuing to hold up. Longer term wise, we're still holding up above the 20-day moving average, so we're going to see how things unfold over the next couple of days here with the market. You can see our short term, our momentum cycle here is topped out yesterday. We're at the 5 days, so we'll see if selling steps in. Yesterday's chart, I did point out on our trend analysis chart that the SP 500 was primed and ready for some type of oversold bounce, but then we could very easily see the selling step in, and over the next 2 or 3 days, or really the next 3 to 5 days, will really tell us if the market is breaking down or moving higher, and then we can recalibrate on what trends we should be involved in. Now if we take a look over at bonds, bonds had a big kind of reversal style day yesterday where it kind of blew off and then sold down. And today we're bouncing off the 5-day moving average. We're trading higher, up about 0.3%. So overall, it's got some momentum. This was a nice breakout in terms of bonds. If we just look at this falling trend line through here, we've seen these levels get this bull flag here, broke to the upside. We saw it break this pivot high. It broke this pivot high. And more or less kind of it looks like an exhaustion type of move. Stock market sold off, bonds blew up and took off, and now they're pulling back. But this is kind of a high momentum play. We'll see if this has some follow through, something similar like this, and we'll see if it can get some traction here and pick up speed and continue to run to the upside. Now if this is the overall momentum, we can give it an upside target using Fibonacci extension. We'll go from this previous run right here. This is the very conservative run. You go from here to this high and down to yesterday's low. And then we just move this price forward. So you can see where the potential of this momentum carries through. We're going to see it go up to this area and then likely up to the 166, which happens to be right through this previous high in the market. And the markets love to be fractal. They always seem to move at these critical levels. 618, you'll notice this is the first level of resistance. It also happens to be where this previous standout high is as well. So that's how the market is poised to go at this point. If we get follow through buying, we could see very strong momentum move up here and see another 3% gain or so in the price of bonds. Looking over at the VIX real quick, down 6% today. You can see the nice pop that we had, overall fizzling out again today. If we do get some selling to step in over the next session or two, we could see this VIX really spike up into the low 20s. At this point, it's still holding up above these previous spikes. So this sell-off was a little more significant than the last one. We'll see if we get some follow-through selling and panic in the market with another leg to the downside. Taking a look at the chart of gold, pullback yesterday. Today it's trying to hold the 5-day moving average. Gold is holding up as kind of the core safe haven play, the global safe haven play, along with bonds. And if we take a look over at silver, silver yesterday had that big move down. I talked about it in pre-market that silver could very easily slide and make a lower low. It's just the way silver likes to move. It's more volatile. Overall, if we take a look at gold miners, big down day again on gold miners. This was kind of looked like a reversal bar. I talked about this yesterday in pre-market as well, that we could see gold miners have more of a correction. Ideally, we'd like to see it trade sideways here in this range, but we could very easily see this happen. We got to move up, move down. We could see it poke down towards this 39 level, break this low. If it breaks this low, that will create some panic selling, probably some type of big drop, and then some type of sharp reversal, and then it'll be primed and ready for another big move. Hopefully it'll hold up in this range and kind of hold its ground and hopefully move higher without doing this correction. But overall, this is what the market likes to do, is to break a previous pivot low, flush the market out, everybody panics, and then take off to the upside. Looking over at natural gas, down 2% this morning. It's really trading sideways in this tight range. It's trying to find a bottom. It hasn't yet. Overall, we'll see how price shakes out today. Again, yesterday I was pointing out how it's more or less do or die for natural gas. It is on the verge of a very strong pop or a strong drop, and we're just going to let it continue to do its thing. We are starting to see a little bit of upward momentum in these shorter term cycles, and they're pulling back, but again, we're still in this downtrend, so the bias is sellers in control, and either we hold this level today, or I think we're going to start to break down and could get stopped out, and we'll move on to a new trade and potentially let this bottom finally get put into place and form, and we could try and catch one of these big pops like we caught last time. Looking over at crude, up 1%. It has came all the way down to that measured move, that 53 area, 52. It's starting to bounce up. It is at the 5-day moving average, so this is a potential level for it to continue to sell back down and test these lows, maybe go a bit lower. But overall, it's had the big measured move drop. It's at long-term support, so I would expect some chatter through here and some type of bounce continuing to hold for potentially a week or so. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.